give the floor for first speakers to introduce himself and others online. And after that, we'll discuss the issue of the financing regional growth in after COVID and what's we can do in able to solve this problem. And I think there is a crisis, financial crisis, because the COVID and what's happening now in Ukraine and Russia. And I think we need good advice from our colleagues and the speakers for tonight. Khaled, please.
Thank you, Tawfiq. So my name is Khalid Kabir. I work as the Chief Executive Officer of VITAS Group. VITAS Group is in the business of financial inclusion. We work with MSMEs in 5 countries in this region, which is Jordan, Iraq, Lebanon, Palestine, Egypt. We are in Romania also, but that's not part of the MENA. We are wholly owned by an American nonprofit called Global Communities, and we have been in this business in this region for over 18 years on an average. I have been based here in Jordan for 10 years. I'm originally from Pakistan and have experience in MSME finance and microfinance banking as well.
Thank you, Khaled. I'll give the floor to Rafiq, please.
Thank you, and good evening, everyone. I hope that you hear me well, and I'm happy to attend from Tunisia today, from Tunis, representing the AmCham Tunisia. I'm also a partner and general counsel of Africa Invest. Africa Invest, we are a private equity fund manager and investor in Africa and in the Middle East. We've raised more than $2 billion over the last 20 years that we've invested in more than 170 companies. Today we have 10 offices, including 5 offices in the MENA region, Tunisia, where I'm based, but also Algeria, Morocco, Cairo, and Dubai, and 5 other offices in sub-Saharan Africa, in Kenya, Nigeria, Ivory Coast, Mauritius, and with also presence in France. I'm very happy to be here to talk about the financial sector that we know very well, and the investment. And from my background, I'm a lawyer and also a background in business.
Thank you, Rafi. I think Heka, she is not with us right now, but Maria, please, can you introduce yourself?
Sure. I'm Meryl Burpo. I'm with the U.S. International Development Finance Corporation, called DFC. That was formerly OPIC, for those of you who know OPIC. We're very active in the Middle East, including in Jordan, of course. I'm a senior advisor in the organization, and we've recently been doing some analysis of the projects where we have been lending to small and medium enterprises, or where we're supporting a financial institution that does that lending. And I think we have some interesting findings that I hope we'll have a chance to share during the meeting. Thank you.
I just want to continue the ladies, and we'll give the floor for you because we're going to say ladies first. Can we hear from you, please? What's your input concerning this session?
I'm not sure who you're addressing.
We're just going to talk and see how we can solve the financial problems after the COVID, and especially again after what's happening now, the war and increasing the prices of all the materials all over the world, and how we can face this problem. If you have any idea, you can give us to see in our recommendation at the end.
Sorry,
yes.
I wasn't sure. Okay, so we have looked at some interesting results from evaluating our own projects earlier that I think are relevant in a post-COVID environment. Part of that is that small and medium enterprises and the ability to finance them is critically important in economic growth. You know, to have a diversified economy where you are not dependent on just a couple of large companies, is valuable not just to the individuals who are entrepreneurs, but frankly to the financial institutions. One of the things we found was that when we can train financial bank officers to do cash flow analysis and risk assessment, rather than depending solely on collateral, they're able to open up a great deal more financing to small businesses. But how does that help the bank, for example, to have increased economic stability? Well, we found that a lot of banks in the Middle East are competing with each other for the few large corporations that are known to be financially sound, or at least have been in the past. But we found that when they analyzed the results of lending to small businesses, that actually they were a lower risk as a portfolio than lending to these big corporate financials, these big corporate institutions that they were so used to competing for. So I think that one of the really important things is to provide the small businesses with some training on how to do financial modeling and cash flow projections and business plans so that they are in a good position to provide the data that the banks need to fully evaluate small businesses, train the bank officers to be ready to do risk analysis and cash flow projections so they're not as dependent on collateral. And speaking of collateral, the previous panel was about women and women-owned businesses. As you may know, in the Middle East, women often don't have the kind of collateral property titles that men do. It can be incredibly useful in expanding the portfolio of a bank, for example, to reduce their collateral requirement as the basis on which they lend. And that helps women-owned businesses, it helps small business owners, but it also helps large businesses that want to expand, but they've already dedicated their collateral to another loan. So I'll stop there because I think a lot of people want to talk, but I do think we've got some good lessons that will be helpful going forward. Thank you.
Thank you, Rafiq. I just gonna mention, I heard that in the Arab region, most of the saving account, more than 50% of the saving account, it's belong to women. How we can encourage this woman to start small businesses and to create job opportunities for the women and for the new generation?
Yeah, thank you for this question. It's a very good one, and I would like also to jump on what Meryl just mentioned on the gap that we see today in the financing of these women, on the financing of this project. And actually, we at Africa Invest, we have actually been financed by USDFC to set up a credit fund that would grant loans to SMEs in Africa and the Middle East to these small and medium-sized companies without real collaterals, just to finance working capital. Because today the needs of companies are not only to finance assets, but also working capital, especially during the COVID crisis. We saw that many of these companies had a cash crunch, and financing working capital and financing very short-term financial needs is critical. So having more and more banks and financial intermediaries look at these very small projects, because again, banks have historically looked at bigger projects, and today we see projects like microfinance, for example. We've helped set up several microfinance projects in the region. In Tunisia, actually we contributed to create an ecosystem of microfinance with a microfinance law. We also try to help, and microfinance is more a service than a loan, and people sometimes have challenged understanding the high interest rates in microfinance, but these are really a service to the people who cannot afford having those bank loans. So microfinance is critical, and when you see what it has been achieving over the last 10 years in the region is great for those women and men actually who are starting their projects who are still not yet bankable for banks. So Um, and also, the VC ecosystem is critical. So the venture capital, we at Africa Invest, we've set up also one of the first Pan-African venture capital funds and financing those startups and having business angels, love money, and the full range from seed capital to Series A, Series B in the VC space is very important for those young men and women to start a project. So there's a full range of products that are available in the region, and I will stop there so that my colleagues maybe complete that.
Thank you, Rafi. Khaled, the floor is for you.
Yeah, thank you. Let me just give a bit of context. We work with businesses, so we are a lender to medium, small and very small businesses. We don't touch the medium sector. So let's try and put them in a bucket. Micro, small, and medium is a very broad definition, and there are multiple segments within this. Where we work is anywhere between, you can say, $3,000 up till $40,000. So this is one. When we talk about SME, again, the medium, tends to go towards the banking sector, and the banks are better positioned to do that. Our experience has been, and both of my colleagues mentioned the significance of job creation, economic growth, and this is the backbone. In the previous session, someone mentioned 96% of the businesses in Jordan are small and very small businesses. So we work in 5 countries. Our experience, the point which I would like to make is as follows. When we talk about regulatory framework, the regulatory framework is not just putting the law in place. It is much deeper than that. For example, if we look across the Middle East, North Africa region, the 2 best regulatory frameworks are in countries which are both at war, Yemen and Syria. Both have microfinance banking regulation, but unfortunately both are at war. When we look at the other regulatory frameworks, I think all the countries have microfinance law with the exception of Iraq, which is a large market, but there has been no progress made there. This is one. So there is a disparity of the extent of regulation, number one, introduced in all the countries we work. The second part is the regulation generally follows the market evolution. What we have seen in COVID especially is that the regulation has to actually catch up. So many digital platforms and so many digital interventions have come in, and they are only as good as the infrastructure available and the regulation available. So for example, what that means in terms of regulation is there a digital signature law? Is there a digital invoicing law? Unless that is not there, we cannot really leverage the digital infrastructure. And I think the last point on the regulation which I would like to make is that unfortunately in some of the countries where we work, the regulation is, I would not say restrictive. It gives us a good platform to start with, but in some ways, it tries to put us in parallel with the banks. We are not, there are all non-deposit taking institutions, except for Syria and Yemen. So the same credentials are applied to the institutions which are non-NBFCs also, which is an overkill. So there are certain prudential regulations which go against it. So if we want to foster growth in this sector, I think that the regulatory framework should actually push the institutions to become more attractive to the investors, and this is how you create investment. So I think this is the point I would like to make in the beginning.
Thank you, Khaled. Again, what are the available financing programs to support the economics and the social transformation of the MENA region? I'll give the floor to Maria again. Did you hear? Did you hear my question, Rafi?
Yeah, I think we've lost Mary, but I can take it while Mary reconnects. I see that Mary is back. Mary?
Yes,
can
I
start.
apologize. Everything froze up and I lost my connection for a minute. Were you asking a question?
Do you want me to repeat the question again?
Yeah,
How,
I'm afraid my connection was lost and I didn't hear it.
what are the available finance programs to support the economics and the social transformation in the region, in the MENA?
Yes, I mean, for DFC, we have debt, we have equity, both for investment funds and for direct investment in new firms. We have political risk insurance, which is we're finding to be a really interesting tool for us in terms of capital markets. So for debt for nature swaps, for green bonds, for blue bonds, for other bonds that are being issued, when you apply our political risk insurance to it, we're going from, say, 16 levels down to a AA2 rating for the bond. And so it makes a huge difference in terms of the ability of an entity in the Middle East to issue bonds on the capital market. So that political risk insurance tool is valuable, not just for that, of course, but for inconvertibility and expropriation and civil strife. We also are offering technical assistance support, and we've got impact fund support. So those are some of the tools we're offering. I know, of course, that there are many other entities that are doing a lot of work in this region. I did want to mention that in terms of post-COVID, injecting liquidity, additional liquidity into our existing clients that are financial institutions is very important in terms of stabilizing the economy and allowing them to support their borrowers. And that's all for now. Thank you.
Thank you. Rafi,
Yeah, thank you.
would like to add
So
something?
yeah, of course, I would just add from my end two initiatives that we are launching at African Best. So the first one is on financial inclusion, and then the second one on health. So on financial inclusion, we've set up a fund that actually provides financing to banks, microfinance institutions, insurance companies to bridge that financing gap that I mentioned earlier, and that we are very proud to support financial institutions and banks grow regionally and put more liquidity into the markets. And this is a vertical in which we believe a lot in the region. And there's a lot of consolidation also that will take place and the banking sector in many of the MENA region countries. The second one is health, and especially after the COVID pandemic, we are working very closely now with some US foundation and private investor and pharmacy company to enhance primary access to health for populations. And this is a debt fund that would provide actually financing to growing projects in the generic manufacturing companies, in producers, in many of those healthcare providers to enhance access of poor and low tier populations to health. We believe in that, and we're having the support of many of our investors. The challenge there is how to attract investors into that segment, because returns may not be up to the expectation of certain investors. So the idea is to have first impact investors, but also catalytic investors. And we see here the role of public institutions, of maybe US international institutions, to be catalytic and to be to have maybe a first loss or a guarantee to those initiatives to attract more private money, more private investors into that segment. And we will be actually structuring that fund with a catalytic tier and with a commercial tier so that we can bridge the gap of expectation of different investors.
Thank you, Rafi. Khaled, please.
I think there are lots of sources of debt financing available, at least in our sector, in micro and VSC financing in which we work. So they are both local as well as international. I can name few. Finance in Motion, which is the KFW's development finance arm. They work in the MENA region. DFC. We also work with DFC in many countries. There's FMO, which has recently entered into market, EIB, which is also recently entered into market, EBRD, which is looking at it. So there are many unilaterals and multilaterals, IFC, of course, which are, who are there. One exception in the whole region is Iraq. There has been, we work with DFC, and there has been absolutely zero movement on catalyzing the local financing from the banks. In all the other countries, including Lebanon and Palestine, Jordan, where we work, and Egypt, the banks are open, because I think it's very interesting to see the comparison that when you hear the regulator speak about MSME financing or microfinancing, they try and bucket us as a secondary segment. Whereas when we work with the commercial segments, they categorize it as us. They would only lend us if we pay back, right? If we are good debt, banks would only lend us. So we work with the banks, and there's lots of banks. On the grant side, I don't think there are, for commercial microfinance, there are no grants available. They have dried up over the years, but there is a lot of technical assistance. One area where there is a big gap, and I think Rafiq also mentioned, is the equity investor. So whatever equity investment you see in these regions are mostly by offshore. There is no fund, which looks at the financial inclusion. And our experience is that is because micro and VSC financing is not seen as a investable segment, which is not right. If you look at the numbers, we are investable. The returns can be there. So this is our view, my view.
Last question, just give after that the floor for the audience. How can the U.S. international and local finance institution better enable to prevent investment and to help the MENA to accelerate the sustainable development? And I need to add a little bit. We just last week, we finished in Jordan the new law for in small businesses that they can work from home. Around 51 new business that can start at home. What your advice? Start from Khalid here and again, please. How we can help the new people to start a business, especially we change the law that they can start at home, and how can the U.S. help us to develop the sustainable growth and the sustainable business?
So I'll try and link it up with the third part of the question, third question. I think this is where world is going. So, when we looked at our own strategy 3 years ago, we realized that the next generation, the first instance they have is to look for a service or a product online. This is the first reaction we get. What that has done and has accelerated the last 3 years is the service providers and the product sellers and the merchants, they have also gone online. So which in turn means that a player like us in the financial sector, if we go out today door to door and walk the market and try and find the clients, we won't be able to find the clients because they will get invisible. So then the question is, what is the answer? There are two things which have to be considered here. Number one, the banks and more so ourselves, because we are talking about small, we will have to change our way we acquire the client and we find the client. This is the era of partnerships, and the partnerships are more plausible because the exchange of information can be seamless in this world, which is very connected. I think the way we acquire the client has to be different, and all the clients are going there. And I think all the MSME lenders are also looking at this space. Who does it first and more quickly. I think that's important. I think it's a very good step that they can establish business at home. The main question will be, how do we make them visible? Who do they connect with? One big gap is between which commercial banks are working on it, but they don't go down market, and we are looking at it, that there's a merchant which has a dark store or a dark kitchen. How do we access that? So the partnership comes in. I think where the multilaterals can and the unilateral sovereign funds can play a role. And Rafiq I agree with him, they can play a catalytic role. So they take risk where no one else is taking the risk. So the question to ask is why the local investors are not investing as much in microfinance as they would. In some of the markets, we have seen that. For example, in Egypt, we see that the commercial players have come in. Now, one can debate whether that's good or bad, but this movement is there, and market adjusts over time. One thing which, at least since I'm not from the region, I always wondered, and we have examples in Egypt and in Yemen also in the region, but it didn't really work. Is building an apex institution. So there is SFD. There used to be SFD in Egypt. There was SFD in Social Fund for Development in Yemen, but understandably these are smaller markets. Palestine, Jordan, Lebanon are small. So can there be a regional apex fund which can catalyze this, this growth? The first loss absorption capacity is much higher for sovereign funds. So I think this is where they should come in. They should, if you allow me to say, the sovereign fund should not give money to the government because it never works. The experience year after year has shown. World Bank brings in money, gives it to the ex-ministry. It never works. So I mean, if we want to foster growth and kick the growth, it has to go to private sector. And this is, the sovereign funds should take the risk where no one else is taking the risk, and this is how it will start.
Thank you. Rafiq, can you add something, please?
Thank you, Khaled, for this very thorough analysis. And I think one of the key challenges is to build capacity in the private sector and having those technical assistance pockets and having those capacity building and deal construction is key, especially in small economies. And we are seeing for the health initiative or for the other initiative I mentioned on venture capital, those very early stage projects and having assistance such as the USAID line, for example, in Tunisia, we have Tunisia Jobs Initiative that provides technical assistance and builds capacity for companies is key, because companies not only need capital, but also capacity, but also talents, but also skills. And this is key, especially in our regions where we see a lot of brains leaving the countries and going to, unfortunately, more and more to Western countries. So having more and more talents going back to the region and trained is very important for us. And I think we should work on building capacity. Second, I would say foreign currency, and maybe Khaled touched on it, but having local currency financing is important for our local economies, because having this exposure to USD and euros and devaluation has been very negative to many of our companies who do not have access to hard currency, who do not export. So if those sovereign wealth funds or international investors could have pockets in local currency, that would be ideal, or hedge instruments for those companies. It's very important for them. Third, I think our economies and our companies need more regional integration. We have relatively small countries and economies, so integration is key, and I hope that the MENA would work more on economic integration, on more regional champions. And we at African West, we've launched an initiative between France and Tunisia, and France and Africa, where we have been sponsoring champions from Africa to Europe and Europe to Africa. And I hope that we will be able to have those regional initiatives between different countries in the MENA region to create those regional champions. I think that would be key. Last but not least is governance, and having better governance in the authorizations, in the way all these regulation work is critical. And I hope that also capacity would also go to the public sector and enhancing the way, for example, renewable energy authorization, concessions, have been handled is key, especially in certain countries where we've been lagging behind green energy and all these projects in solar sector, in the hydropower sector, and wind sector are really dragging behind. So I hope that we will be able to make better progress on those.
Thank you, Rafi. Mariela, can you add something?
Oh, I think, there are several different elements here. One is to identify the businesses, and DFC has been doing local town halls around sub-Saharan Africa and the Middle East recently to try to identify small businesses that would benefit from DFC and help them to understand how to use our programs. That is valuable. In fact, I just did one in Iraq a few months ago. Um, but I think that also one of the things we found is that moving these small businesses from the informal sector to the formal sector has tremendous benefits for sustainability. Once they have a bank account, once they are keeping financial records that can be reviewed by lenders later, once they have pay stubs so their employees can go out and get a car loan or a loan for education or a housing loan, once you get that motion from informal sector to formal sector, you have a crescendo of growth that follows from that. And so I think that to the extent that people can focus on helping to move businesses into the formal sector through digital payments, digital accounting, that sort of thing, that'll be important. I also think just on a bigger level, a macro level, availability of energy, availability of clean water, these are things that are going to ultimately impact the whole economy, but also the ability of businesses to operate. And so for sovereign funds to focus on infrastructure and water projects and renewable energy projects, I think these are important elements in the effort. Thank you.
Thank you. I think we can take one question if there is. Okay, if there is any question before we'll thank our speakers. The bank guarantees it. Okay. I don't think, Khalid, do you think the bank guarantees and the requirement from banks, it's make problems for people to start any business or any new business?
Absolutely. I mean, I think this is the whole issue. Banks go. This is why we exist. I always say that if banks ventured into MSME segment, we would not exist today. And I don't blame them. Don't take me wrong, because I think they are Mercedes manufacturing factory. You can't really ask them to start manufacturing a Toyota Corolla or something. So it's a positioning. We are positioned to that. So the small answer is absolutely. I think the banks have to go towards more cash flow lending, understand the business risk, and lend based on that. This is what we do. 50% of our underwriting weight is given to the character. So this is the whole paraphernalia as to how do we appraise the character, and the other 50% is on the business. And the business does not need to have books. I think this notion, because we cannot wait for that. So what we do is we go and construct books with them, and then we lend to them. So I think anyone who has a narrow asset base, they cannot go to bank. This is the problem. So you have to have collateral, you have to have guarantees and all, you have to have cash to get more cash.
Thank you. Rafi, you want to add any on these notes concerning the bank guarantee and it's a problem for people to start a business?
Yeah, actually, it's a very good point, and I think we also need to bear in mind that there are not only banks who can provide financing to companies, and this is where microfinance comes, where private equity comes, where venture capital comes. So I think there's a lot of education to do for our entrepreneurs and business people to know that obviously the banks are here and they do very well their job, but there are alternative sources of financing coming from those private equity funds, from those microfinance institutions that can take more risk. Obviously, the upside would be also there, but and this is where the private equity industry and having more and more asset manager in the private equity sector in our region is key, and we are working with many of the industry association to build more GPs, more private equity fund managers, and I think we as intermediaries between investors and companies can do much more in our economy.
Thank you. Maria?
Yeah, I just wanted to reiterate something that Rafiq said earlier, which is the importance of local currency lending. Obviously, concerns about devaluation of currency really hinder small businesses from taking out loans if they're not earning hard currency. So I just wanted to agree with that. And then just confirm that I think we're heading in the right direction when we talk about how do we do this sustainably? Not just how do we focus on the 3 big companies in your country, but how do we build an economy by spreading the wealth to the smaller businesses?
Thank you, my colleagues here, and I'll thank Maher to give me his reading glasses because thank you very much. If there is no more questions, really thank you for this evening, and I learned a lot from you all guys for this, what's happening today. And we hope we have a conclusion at the end. Mr. Samer or Mr. Batani, I don't know who's going to give the conclusion for this 2 days events, and I think it's a benefit of AmCham Jordan to do this workshop. Thank you.
Thank you.